Hey guys, this is Chris Mincolla with the Mincolla Group over at West USA Realty, and I hope you're doing well. I wanted to check in with you and see if you've been considering any changes in your current home, such as selling or exploring other options, refinance, home equity line of credit, whatever the case may be, or just trying to figure out a way to lower your expenses. Maybe you're even thinking about investing, renting out your property. I've been working with a lot of home buyers who are exploring their next move, and I wanted to share some insights that might be helpful to you. Whether you're just starting to think about selling or you're curious about what your home is worth, there are a few things to consider in today's market for sure. I'd be happy to walk you through your options, no pressure, just some helpful information. And right now I'm seeing something happening in the market right now that most agents are not talking about with their clients. When rates drop over the last year, especially 6 months, we've seen rates drop. And every agent's in town starts calling buyers about affordability. Okay. And especially in the last few days, rates have really dropped. And I'll show you they're lower than you think, but I'll show you that in a second. But the real advantage right now belongs to sellers who already know what they want in their next home. Okay, those sellers get to sell their current home into higher demand, okay, before the inventory catches up. Higher demand, selling into higher demand before the inventory catches up. Then those people get to buy their next home, okay, before prices adjust upward to reflect that new demand. Does that make sense? So we know as affordability gets better, rates come down, okay, especially in a big way, things become more affordable, okay? And then more buyers start jumping into the market. Plus, just over time, people need to move, right? So they just can't wait forever to move, or they have, something come up in their life. So I guess the question is for a lot of people, where am I going to move next? So if you knew the right home was available for you today, would selling your current home first make this whole process easier for you, or would it make it harder? Well, I think for most people, that would be the scary part. Like, where am I going to move to, right? Or the thing to figure out. So most people would probably say, yeah, that would make it a little bit easier, Chris. Okay, so you know, would it be helpful then to start looking at properties now, okay, in the areas you might be thinking about? And if you're not sure about what area, just kind of tell us, like, what kind of lifestyle are you looking for? What kind of neighborhood are you looking for? Maybe the schools are important, the shopping, being close to things, whatever the case may be. We could talk about that, have a consultation with you on that next home purchase and look at that. Maybe you're even just thinking about renting your current home out and buying something else, or investing in other properties. That's what we want to be able to do, is sit down and kind of go over that. But right now there's a shift happening in the market with rates coming down. We've already seen mortgage application data go up the entire year of 2025. We saw pending sales going up all year long too, and we expect that to continue, especially with lower rates going into the new year. The government just said that they're going to be buying $200 billion with a B in mortgage-backed securities. Basically, what that means is that's going to keep interest rates lower. The 10-year treasury, 30-year mortgage rate, they track with each other. There's usually historically about a 1.5 to 1.7 percent spread between the two of those. So at any given time, that's kind of what we're used to. When the rates went way up, we had rates in the sevens and even up to eight across the country. We saw that out of whack. We saw that as high as 3%. So or more. So it's important, to understand what's going on here with these mortgage-backed securities, because it's going to keep interest rates low all this year. Okay. uh, because of that spread. Basically, that's going to keep the spread in line where it should be, and it's already where it should be now. So, sorry about that. So basically, what we would love to do for you is show you something and why this is important. So I'm going to share my screen with you here really quick so that you can see what I'm looking at. So every year, I'll get into the mortgage rates in just a second. But every year we know, except for 2021, that was an anomaly year. That was a little different with the inventory and the interest rates. You know, we're not going to see. You can get those with buy downs. You can get those rates right now, and I can explain that to you to another time. But every year, right around March, April, May, June, we see, you know, across the country, inventory goes up, it goes up. And this year, we've actually seen a little bit of inventory growth now down because it was up to like 34% across the country in inventory of single family homes was actually up 34%. It's now down 9.9%. Now, that's probably going to go up over the next 2, 3, 4 months. But the difference is the mortgage rates keep going down. So again, remember, you want to sell into the demand. Okay. So into the seasonal, but also into the overall trend happening in the market. Okay. And the trend is as affordability gets better, as those rates continue to drop or stay within check, that's going to bring more demand into the market. For every 1% or 100 basis point interest rate lower, there are potentially another 5 million more people who can enter the market. So, right now, interest rates, I'm going to share this with you here. Um, Interest rates are actually um, at this is from our mortgage broker, okay, with approved financing, 620 credit or higher, okay. But this is from our mortgage broker, Andrew Fisher, Semperfi Home Loans. And yes, he is a Marine. And my wife Cynthia and I have a real estate team, but he's our mortgage broker, our preferred lender. He's actually our son, full disclosure. So basically, this is where rates are today. Uh, so it's lower than what you're seeing on TV or online right now with the average across the country. Usually, when they give you that average, the mortgage broker is going to be lower. They shop the best rates over 100 different lenders. They charge less in fees, which is what this APR is. So you're going to get a better deal. You're going to save more money. You're going to save thousands over time, but this and even up front really, but this conventional is what you normally hear quoted out there. And right now on TV you're hearing something within the high fives, low sixes right now, which has dropped about 20 basis points over the last few days when with just the announcement, not even putting that whole 200 billion into the system to buy those mortgage-backed securities, but just the announcement that they were going to do it, the mortgage spreads got better. The 10-year treasury didn't really drop, but the spread between that 10-year treasury and the mortgage rate, the 30-year mortgage, got better. So that's why rates are lower. This is why we're saying you've got the normal seasonal demand coming, but you're going to have this layered on top of that, the lower rates that we haven't seen, in like 3 years. So right now today, your conventional is at 5.3%. Your FHA is 4.99%. That's amazing to see that number again. VA is 5% and jumbo 5.6. So this gives you a really good idea of what we're starting to see and where things are headed, especially when we're looking at this. So what we'd love to be able to do is kind of go through, sorry about that, kind of go through all your options if looking at homes to kind of get in there to figure out if there's a home to move to in the area you want to be in. We can look at that. We can look at those homes, kind of get a good feel for it. You look at a few of those before you even put your home on the market. And what we would want to do as far as your property is concerned is do a 10 to 15-minute walkthrough, you know, kind of give you an idea of what the value is with the updates you've done, the current condition, which a Zestimate cannot do. The Zestimate's not on the ground in your house, looking at the updates you've done. It's just pulling all the, the mindless data from the zip code and throwing all the different property types together. It's not looking at you a one story, a two story, and looking at the proper comparable sales in the area. We'll look at those comparable sales. So we'll give you that 10 to 15-minute walkthrough just to look at the current condition, give you a comparables package, which will be the actives. So you know what kind of, homes are for sale in the area. You'll be able to see what's under contract in the area. And so that kind of gives us the now trend, okay, of what's gone under contract and the number of days on market and what's actually sold in the last 3 to 6 months. Okay. And then we'll also third give you a net sheet, which will basically be looking at what the low, medium, and high of those comparable sales look at, depending on where you were to, price it and actually sell it at, compared to what you owe on the property, and the fees associated with selling a home, and that would give you your net walk away money. And if you wanted to also, look at refinancing, renting the home out, we can give you all of that analysis. We can even if you decide to do nothing but stay in the home, we can just give you some great information just with that. But also, again, you can look at HELOCs, with pulling equity out of your home to do other things. You can, maybe just get some good information on home warranties, maybe even just save some money on your homeowner's insurance. Okay. Or just some of our good vendors that we work with, if there's things you want to do to your property. So just some really good information that we can give you, no pressure at all, nothing salesy, just a consultation on, all the aspects of real estate and what it would look like to, do whatever it is you decide to do. So if you have any questions at all in the meantime, feel free to reach out, but we would love to be able to set a time to talk to you more about this. Feel free to reach out, and we would love to meet with you and go through all the details. Thanks a lot, and Happy New Year to everybody.